Okay, coming back to the markets, you have the index, which is absolutely flat, but we're still, well above 11,350, which is rather interesting. We'll keep it with more numbers and keep it with perhaps the technology space. Saurabh Gupta, who's CFO Dixon Technologies, joins us to talk more about their earnings. Saurabh, it's great to have you on the show. Thanks very much for taking out the time. Take us through why revenues have dipped in the quarter. Is this a one-off? What drove the profit really?
Yeah, so it has been a mixed bag for us, I think. So our lighting segment continued to show a stellar growth quarter on quarter. We did a 7.5% margin in this quarter, which was a growth of almost 400 bips as against same period last year. So lighting has been showing a stellar growth. We have added 2 new customers in the lighting business, which is Siska and Orient. In addition to 2 new customers which we added in the last quarter 4. Which was Jaguar and Usha. So I think so new customer addition, the operating leverage benefits kicking in, the backward integration on mechanical parts, the whole economies of scale benefits are kicking in the lighting business. And now we think we are globally competitive in the lighting business. We have an extremely robust order book in the lighting business, and we think we are very confident that we will continue to show upwards of 7.5% growth in coming quarters as well.
Margins are flat for the quarter. Do you think the raw material price fluctuation and availability can be attributed to this?
Yeah, so in this quarter, I think so there have been primarily 2 headwinds, one on the currency appreciation and other on the commodity price increase. And we do import a lot of raw materials. So we have been hit by both of these things in our businesses, and especially in the washing machine business where the margins have kind of contracted by 100 bips. So order book is not a problem. We have a strong order book in both washing machine, lighting and consumer electronic business. But washing machine business, we are confident that the margins would come back in this quarter as the impact of foreign currency impact and the commodity price impact is passed on to the customers, but with a lag. So that would get passed on, and that margin should see an improvement in this quarter. But apart from that, I think so the volumes have been strong in all these 3 verticals. The order book looks strong. The scale and size is being achieved in these 3 verticals, and which is actually reflecting in better margins.
Okay. Consumer discretionary, analysts are saying that for the entire industry, a strong double-digit growth of 25.44% in the upcoming years is possible. Walk us through your own outlook on individual segments, and how is it that you plan to capitalize on this growth?
Yeah, so we also think we are also the same opinion that with increase in disposable income, the growth in the consumer discretionary space will continue to see a good growth. If you look at our consumer electronic business, we have expanded our capacity from 1.2 million LED TV sets to 2.4 million, and that we have done in Tirupati. We have also deepened the level of manufacturing in Tirupati. Our LCM panel manufacturing has started in July. Our SMT lines will get operational from September. So all of this backward integration would ultimately help us improve our value add, and which will help us improve our margins and profitability. So the margins pressure that you see in quarter 1 on a consumer electronic business will come back in quarter 2. The margin will get restored because as we deepen our manufacturing in Tirupati, and we also will shut down our plant in Dehradun on LED TV side, and that would help us improve the margins. On the lighting side, we have in the last couple of years we have added all the big customers, whether it's Crompton, Wipro, Panasonic, Bajaj, Philips continues to be a bigger customer. Then we have added Jaguar, Usha, Orient. With any new customer addition, the multiple operating leverage kicks in. We have a huge order book in the lighting business as well. And as far as the washing machine business, we have expanded our capacity from 60,000 washing machines per month to almost 1 million washing machines per month on account of the huge order book that we have. So order book is not a problem. What we are seeing is that the industry is growing at X percentage, And the outsourcing, the brands are increasingly preferring to outsource manufacturing to players like us. So the outsourcing industry is actually growing by 1.8 to 2x, and we are ultimately a bigger beneficiary of that. And the government is also levying import duties, and which helps the whole domestic manufacturing and players like us.
Okay, Saurabh, good chatting with you. Thanks much for taking the time out and highlighting how the quarter gone by has been and what we can hear from you in the future quarters. Quick break on that note. When we come back, chat